Hello, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Marilyn Monroe said that diamonds are a girl's best friend. That may or may not be true, but what is certain is the investment landscape traditionally has had a fairly complicated relationship with the commodity itself. Could you invest someday in diamonds? And of course, we're not talking about the ones that rest on your finger. So we're going to talk about that right now with Cormac Kinney, founder and CEO at Diamond Standard. Cormac, great to have you. This is a really unique conversation for us, and I think it's one I know that you're having a lot of. So thanks for joining us.
Great to be here with you.
Sure.
Thanks.
So Cormac, there's a lot of commodities that are in the market that we talk about often here on this show. You've got gold, oil, wheat, you name it, it's out there. You can trade it, you can buy it, you can sell it. But diamonds are not on the list. So first of all, I want to know why that is the case. And the second question or follow-up to that question is there a chance that maybe someday we as investors can trade the commodity and not just the hard asset itself?
Yeah, it's interesting. Diamonds are familiar to everyone, and by weight, they're the most valuable natural resource. But the problem with diamonds is that every diamond's a little bit different. Their carat weight, their color, their clarity, all have a huge impact on their value. And that value has historically been very subjective. And private transactions have dominated. So there was no way for an investor to mark to market, meaning that they could really identify what's the value of their diamond on a regular basis. That lack of transparency, that lack of price discovery, prevented diamonds from being an asset like gold that could be part of a portfolio, regardless of how attractive they are.
That's great. Yeah, and something that I know that certainly I'm sure there are many people out there who wonder the same thing. Why can't I trade that as in either an ETF or the commodity itself? But I'm sure there are a lot of viewers watching, Cormac, and I'm sure you get this question as well, especially those that are really focused on sustainable investing, impact and ESG investing, that may feel that diamonds, specifically mining them, kind of goes against those standards that we're establishing for sustainable investing. What do you say to that when you get that question?
Well, every material on Earth has to be either mined or grown. And as far as mining goes, diamonds are actually one of the cleanest assets to mine because it doesn't require a lot of chemicals. Basically, they have to dig up through basalt and volcanic materials, grind it up and extract the diamonds. Every type of mining creates waste. It also creates jobs. It creates economic sustainability for a large economy. And what's also interesting about diamonds is practically every diamond that's ever been found is still sitting somewhere and available to investors now, especially that we have a commodity coming to the market.
What about man-made diamonds, Cormac? Is that something that you're seeing more of? I feel like if it's made in a lab, it certainly doesn't feel as special when you put it on your finger, but it turns out that it can be perfect as far as its brilliance, and that also might assist with maybe satisfying more of these sustainable investing goals. What are your thoughts there?
Well, the lab-grown diamonds use electricity. They use equipment. They don't use labor, so it's actually not very good for an economy to be able to produce something with a machine. But consumers are really demanding scarcity. And that's why you see Rolex watches going up in value tremendously over the last 2 years. People want something authentic and scarce, and natural diamonds are the only solution to that type of customer. But what we expect to see is that diamonds are going to go up in price fairly substantially because of two reasons. One, the mines are being depleted. Bain predicts that diamond mines are going down in production by 5% per year. And at the same time, investors are beginning to accumulate diamonds. That two forces combined are going to cause prices to go up. And we think that natural diamonds will become a substitute for more jewelry products, especially in the middle market.
Mm-hmm. Yeah, scarcity, that's a really good point. I think that's when you can get something that's considered rare, it feels even more special. It's almost like getting a used car these days. It's almost too rare to get one of those, especially at a decent price, which brings me to the next question for you is, we've got a lot of geopolitical headlines out there. We've got this ongoing war in Ukraine, of course. We've got ongoing inflation. Our consumer price index this week came out at 8.5%. It's a 40-year high. So what kind of impact are these type of headlines having on diamond pricing at all?
Well, take a step back, commodities in general. When you have periods of inflation, as we do now and as we've seen, commodities tend to go up in value fairly significantly. And to date, the commodities are outperforming the equities this year, and we think that'll continue for quite a while. Diamonds and other precious metals and rare earth metals, as technology advances, or in our case, as investor demand advances, the demand side for those commodities is changing. And so recently you've seen with uranium, uranium's gone up 50%, which is driven almost exclusively by the launch of new funds that are building positions for the first time in significant size of uranium. That's driven the price up. In diamonds, we have two factors that are headline driven. Number one, demand. Demand for diamonds is increasing, in part because a commodity is available, and they've gone up about 50% in the last 18 months. But now you have a shock of supply from Russia, because around 30% of new diamonds are mined in Russia, mainly by Alrosa. And Alrosa was one of the first 11 companies to be sanctioned by both the US and the EU, preventing trade directly between US and European buyers and Russian sellers.
Terrific, Cormac, thank you. And something else I wanted to ask you, and maybe it's slightly off the topic of diamonds, is you're also someone who studies digital assets, and you talk a lot about their future. So what do you mean by that, and what could we expect as investors and consumers when it comes to the future of digital assets?
Well, my focus is on tokenized commodities, which are a subset. You know, a lot of people are interested in Bitcoin, in that it's really proven the use of the blockchain. But the problem with Bitcoin is that there's nothing behind it. And by nothing, I mean there's no economic substance. You're not creating jobs, you're not creating a tax base, you're not consuming resources and materials other than wastefully consuming electricity. What I'm interested in are tokenized commodities, things that are part of the economic landscape, but by tokenizing them, you create this massive efficiency and you're removing waste. For example, in all the transactions, where a token can be transacted for a few pennies, changing a commodity from a spot product to a futures to an exchange traded fund holding in a matter of seconds. So what we've seen is a lot of applications of blockchain technology to the revolutionizing of existing assets like equities and commodities.
Yeah, certainly we are merely scratching the surface with the technology behind blockchain. I'm sure when blockchain 2.0 comes, it's going to surprise us all with what it can actually do. Cormac, thank you very much. Great conversation. We'd love to have you back again in the future. Good to see you.
Thank you. My pleasure.
Thank you again, Cormac Kinney, who is the founder and CEO at Diamond Standard. Thanks, Cormac. And for more information on anything we're talking about here at UBS, which there is a lot of it, you can visit our website at ubs.com/views, and also follow us on social media. We're on Facebook, Instagram, LinkedIn, and Twitter. Plus, you can check out all of our past UBS Trending episodes on demand, as well as the UBS YouTube channel. And as always, if you have questions about your own portfolio, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day, and remember to keep your eyes on what's trending. We'll see you soon.